Hey, welcome back to Everything Money. In this video, you will learn what happened to Beyond Meat, the collapse, this true collapse of this stock in the last 10 months. We will look at the financials and show you how to evaluate this company, look at its financial statement. We will use our 8-pillar analysis to look at the health of this company and how it translates into a stock price. You will learn how to trade this company at a quicker pace with Trader Mo, and you will learn how to use our software to evaluate all of your investments moving forward. We'll show you how to get the software. But first, who are we? I represent you. I bring normal, somewhat stupid questions to a couple rich guys who maintain a portfolio of about $100 million, including real estate, stocks, multiple businesses. And so I try to surround myself with really smart, wealthy guys. And here they are for you to learn from. Paul, Beyond Meat has had an incredible collapse. And of course, we hear often some people get in. If you're new, you might be saying, wait a minute, I was in this stock. How do I get out? I don't know why I was in, but some YouTubers were telling me so. And if you look at my screen, Paul, Jim Cramer says Beyond Meat could be as big as Amazon and Facebook and Google. How about this one? Huge 10,000% ROI. This guy said 10x stock, all of these from 10 months ago. And of course, favorite stock to buy. Of course, Jeremy said he's putting $250,000 in this stock, which he considered to be the next Tesla. Beyond Meat. It's almost laughable to say out loud that Beyond Meat could be the next Tesla, but in essence, I wonder how he's doing on his position. But Paul, give us your thoughts on Beyond Meat as a company and what happened with this colossal collapse. Mo, I know you have plenty of opinions on this one as well.
All right, guys. So first off, follow us on Instagram. We have a new Instagram account for the channel, and follow us all personally. So here's our Everything Money software. You'll learn more about it later. But we go to the 8 Pillars tab to start looking at it. So I type in Beyond Meat, click on it. Oh, wow. So one of the things we do on the show, guys, is...
Yes, go on, Paul.
They just emailed me the night before. Tim emails me and goes, Paul, here's 30 topics. Which ones you want to do? I picked Beyond Meat. I do zero research up front. And the funny thing is, I read more and more about value investors. And they always say, start with your screening process. Start with your financials, the ones that hit your targets, then go do research on. The biggest criticism we get on this channel sometimes is, you do it backwards. Go do your research and then look at the financials. No, guys, you're going to waste a lot of time. So, Beyond Meat right here hit a peak in January of $192.
Yes.
What was 11 months ago was that Jeremy from Financial thing. What was 11 months ago? That would be November. Where was it in November? It hit a high in November of 156 and a low of 130. It's currently at 95. So for those of you who care about results, 11 months ago he said it had 10,000% ROI potential or 10x potential. It is currently selling for 30% less.
That's not 10x.
35% less. I mean, in certain math, I'm sure in some obscure parallel universe.
Now, we have swings and misses as well.
We do.
What we'd love to show you is maybe why he thought that and currently why the price is...
He cannot explain why he thought that besides hype. That's the thing. What we're going to teach you is why a company over long periods of time will do better. Or poorly. So we have a stock that's down a lot. So let's start with our 8-pillar analysis.
Go on.
First off, $6 billion market cap.
That's a lot.
Right. First pillar is we want the 5 years of earnings multiple versus their $6 billion value to be less than 22.5. Well, it doesn't exist. Why? They make no money.
Okay.
Now, I'm going to immediately skip to the income statement. Why? Because I don't think we have a lot of data on this company. We have 4 years of data. Let's go to their annuals numbers. Oh, here's 5 years of data on the annual numbers. So they have huge revenue growth. Huge revenue growth right here, right?
19 million to 406 million.
And everybody out there is going, this is incredible.
Yes.
Profit, they have not made money in a year yet. Let's see the last 12 months if they've made money. They have not. They've lost 100 million. They've actually lost more money now. And their revenue growth in the last 4 quarters is about the same, actually. It's a little bit higher. So they've lose money. Now, here's the big key. Shares outstanding, guys. This is the silent killer. They had 46 million shares outstanding in 2016. They currently, as of last year, had 62 million shares outstanding. That's a huge jump. They are diluting you. This is a silent killer. And currently, they have 63 million. So they keep issuing more shares. Why do companies do this? I hate to break it to you guys, but they do this because they see the hype. They see everybody wants the stock, and they're just crack dealers in the corner. They're just feeding you what you want. They're giving you every stock you want because they'd rather issue shares than take on debt. Because when they issue expensive shares to you, the crackhead, who do they owe? They owe nobody.
Yeah, nobody, right?
You're just giving them money for equity for the company. They don't owe you a single dollar. That's it. And they're diluting you as they go along. So they're not only killing you by selling you crack, they're diluting you. So if you do happen to survive, you're going to get a smaller piece of the company.
Now, selling off these shares is supposed to increase their market cap.
That is absolutely 100% false. If you hear anybody on the internet say that, like the stupid Russian who's over there on his channel, that is absolutely 100% incorrect.
But unfortunately, it has not occurred for this company. The market cap has gone down, Paul. How could this be?
Because when shares are increased, without a stock split, it's called dilution. It hurts the value of the company. It hurts the share price of the company. The market cap's still going to stay the same. So anyways, guys, unfortunately, we have a balance sheet. The balance sheet is probably actually pretty good. 1.26 billion in current assets, total long-term liabilities of 1.14, and total liabilities of 1.21. So they can pay off everything with a stroke of a check. So that's pretty good. Cash flow, I can't wait to see this. Let's go to their annual cash flow numbers.
This is pillar number 7 is free cash flow.
So guys, what we do in this software is very important. We actually are the only software out there that adds the free cash flow line to the cash flow statement that I know of. We add it right here. Why? Because free cash flow is cash from operations less your capital expenditures. You use that money to pay dividends, buy back shares, make acquisitions, and pay down debt. Well, the good news is they don't have a lot of debt. You know why? Because they can't really pay it down when you have negative free cash flow. It's a negative free cash flow every year, and it's actually increasing every year.
Huzzah.
Look at this. Negative 28, negative 33, negative 61, negative 73, negative 100. And somebody out there saying, yes, but they're a growing company. Congratulations.
Paul, I just don't get it because I watch some of these videos on Beyond Meat, and they didn't really bring up any of these numbers, Mo. They just kept on saying that the world is moving to meatless products, that this is the industry leader.
Thank you.
They don't bring up quick. They don't bring up any of this stuff.
So this is a CNBC article, and I'm very happy you just said this. They don't say anything about numbers.
No.
All it's about is, okay, now they need to get into chicken and pork. And if they do, it's going to work.
What's going to work?
They're going to grow.
So here's what
It's chicken and pork now. It's misunderstood. It's misunderstood because this was only beef.
By the way, it's misunderstood because they don't even understand it. I love when people say something's misunderstood. It's because the people who are explaining it don't understand it. Remember, if you know it well, you can explain it well. I'm not trying to brag here, but I've always been complimented that I can explain things in a very basic way. Guys, let me give another example. One of the most important metrics we look at is price to sales ratio. This tells us the market cap divided by the amount of sales. Right now it's 13.3. Guys, the only companies that have 8 to 13 are currently overpriced tech companies. Software businesses. Those software businesses have gross margin of like 60%. Look at their gross margin, 29%. So to justify this price to sales ratio, they need double the gross margin. They don't even have, this means every unit they sell, they make about 29% in profit before they pay all their overhead, their employees, everything. This is not a company that can justify this price to sales ratio. This to me is a big indicator this company is way overpriced.
They're kind of like the tech of meat though.
Why? Because they use machines that are run by a computer to make, it's stupid.
Tech.
This is exactly, we're looking for justifications for everything.
Exactly. You can look for justification for
Just
anything.
like when somebody won't leave an abusive spouse, like, yeah, but you know, yesterday he used a boxing glove to punch me in the face. He didn't just punch me with his fist. Let's look at the silver lining
Glass
here.
half full.
Was that glasses half full? Guys, it doesn't work. This Beyond Meat, by the way, I've had a Beyond Meat burger.
They're good.
I thoroughly enjoy it, but I don't enjoy the numbers in the company. I want to make sure they get to a more stable place where I can, like our stock analyzer tool right here that we use for our software. First off, 8 pillars, not enough data. Stock analyzer tool, it's useless here. Why? Because the company is losing money. Our stock analyzer tool is for companies that are making money, that have because remember guys, the future is unknown. That's what makes investing hard. The future is unknown, but you've added another layer on top of it. The past is not justified. At least with companies that are established, we can sit there and say, hey, I can give a reasonable range of what I think Microsoft will make in the next 5 or 10 years. Will I be 100% right? No, but I can give I have no clue what Beyond Meat will make in the next 5 or 10 years. It could be losing even more money. It could be I have no clue with any reasonable shadow of a doubt.
So in the world of YouTube, Paul, we should probably title this video, how many hundreds of thousands are you putting into Beyond Meat right now? And is this the next Tesla.
I mean, you are at levels of when they went IPO. So if you believed in
that
it
what it
then
is?
and you still believe in it, why are you not buying more right now? That article I read from CNBC, the guy was like, yeah, I believe in the company. They're misunderstood, but I'm not going to be buying right now. It's like, well, wait, you're talking out of two sides of your mouth.
So yeah, Paul, how many hundreds of grands are you putting into this?
0.
It's
Is there a trick question here?
Rhetorical, of course.
Oh, gotcha. Guys, I would just sit there and say if you want to take a flyer on this thing, trade this thing.
Yeah.
Mo, look at the charts, trade this thing, because it has nothing to do with the financials of the company. It just has to do with the stock movement. I'm all about that. More power to you, but don't try to dilute your mind into believing that this company is the right company for you. They're diluting the crap out of you in shares. They have 50% more shares than they did 4 or 5 years ago. They're diluting the crap out of you guys.
Mo, you want to show us if people are trading Beyond Meat?
Yeah, so be careful with this because they report earnings on Monday. So
stay away.
If you so they have a gap down. This happened last week or this week or whatever it happened. I can see this thing coming down to this range of below $80, sub 8. I think it was about $75. I looked. There's no support in there holding it. And if earnings is bad, this thing will definitely start moving down. You have a downtrend. I'm sure you have low volume. Well, maybe not because it's kind of hypey. Let's see. Oh no, you have pretty low volume. You know what, guys? If I was you and you wanted to trade this thing, I wouldn't go long term. I would just focus right here on the swing trading chart. You're under these major moving averages, which is great. I don't love the volume because it's falling off, but if you can just if you get an engulfing candlestick down, go ahead and short this thing. Short it until Monday. That's what I would do. Get out of there. See if they report before in the morning on Monday or after hours on Monday, and do it that way. So this is the way to do it. But if this speaks to you, $1.50 more will get you into the Bid and Ask Nation. You get all the software from Everything Money, plus you get access to me, the Employed Trader series, teaching seminars, Trading 101 series, and a community of about 900 people that all love to trade, and you will be able to learn from them.
And our software in general, if this makes sense to you and you like the numbers, our software in general has done a great job. I get emails every single day. I get messages on Instagram every single day saying, thank you so much. Only 90 cents per day changes your entire financial future. You get everything you see here. You get the stock and financial news, 8 pillars, and you're locked into that rate forever. You will have that. Click on everythingmoney.com or Patreon. Either one you can sign up with. The benefit of everythingmoney.com is you pay no sales tax for right now, and you're not double charged in your first month. But whatever you feel comfortable with, sign up. It's a no-brainer. This thing will do wonders for you. If it just increases your returns by 1% a year, it could increase your wealth by hundreds of thousands, if not millions, over a 30 or 40-year period. No-brainer. Thanks very much, guys. I appreciate it.
That is our take on Beyond Meat. Be careful out there when other YouTubers are saying buy. Question why they're saying buy. Most of our videos are about avoiding this overhyped, overpriced market, and it is somewhat comical to look back and see people saying how this is just going to go to the moon, and when it doesn't, we like to see why. So keep asking why, and we will bring you our thoughts. That's our take on Beyond Meat. Join the community. Final thumbs up. We'll see you in the next video.